Peter, I know you created quite a stir on the internet. You had an article recently where you said, is silver the next Bitcoin? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, quite excited, as you can see, I have two guests. I have Peter Krauth, who is a longtime gold and silver student, author, and is going to be joining forces with Gwen Preston, the Resource Maven, who you saw on the show a couple weeks ago. I know everybody was excited. You told them how to find the 50 baggers when silver is finally soaring, Gwen. So gaining cult status in the hearts of many in the silver community. Peter, a pleasure to welcome you on in here as well for the first time. And how are you doing?
I'm fine, thanks, Chris. Great to be here, and certainly looking forward to our discussion.
Well, I appreciate that. And Gwen, how's everything going? It's nice to see you again.
It's nice to see you too, Chris. It's Groundhog Day 2020, day 300 and whatever it is, just the same day over again in the COVID world. And but excited for the outlook for precious metals. So happy to chat about that.
Yeah, and certainly in terms of Christmas presents, things to be grateful for, as we will talk about a bit today. You guys are launching a new silver-only newsletter, so we don't have to hear any of these gold guys in there. You know, we got the bigger profit margin right now, but we'll have actually it's in the description link below. Silver Stock Investor, which is what Peter is going to be helping with, and like it or not, I got a bunch of these emails this morning, and I guess it's one of the things, the questions that's going to pop up. Here we see silver down now almost over 3.5% on the day. I don't know of any particular news that accounts for this. Gwen, you had an interesting thought before we hit the record button, but you know, for the people who wonder, what does this mean? Whoever wants to take it first.
Gwen, go ahead.
Yeah, I mean, the not so helpful or specific answer is that there are definitely days when the price moves and it doesn't seem like there's a particular reason. And my thought process around that is often that a macroeconomic event happens, and the whole tail wag the dog setup that we have in the world right now means that the impact that it has on precious metals, there's like a momentary impact and then there's a later impact often. So if we talk about you know, stimulus coming, well, why do stimulus packages happen? Because the economy is desperately in need of them, right? And so that means that says bad things about the economy. I'm obviously generalizing. There's details around COVID and all of that we could dive into, but in general, stimulus happens because it's needed. That means bad things about the economy that should potentially be a positive for gold and silver, but they often fall on the news because people move into stocks instead, because there's this tail wag the dog thing where stimulus is coming. That means the stock market's going to go up. And you're like, fundamentally, that doesn't make any sense, but that is what happens and is what is going to happen. But then the interesting thing is if you wait a day or two, give some period of time, then the fundamental reaction for gold and silver often manifests, which is that stimulus creates, if it works, it creates inflation, and we are in a zero interest rate environment for a long time right now. And so, you know, fundamentally, these announcements are good for gold and silver. So it's just, there can be a lag, I think, in a fundamental reaction in the gold silver price after macroeconomic news. And then there's days when the market just moves. And I know there's lots of people out there who have lots of other ideas about what moves things on a day-to-day basis. I often try and step back and not fret about the day-to-day because it drives me crazy.
Yeah, and plus, especially when you have Jerome Powell saying they're not even thinking about raising interest rates, certainly is a much more fun way of life to live. I've tried the old, like, getting frustrated because silver is down 88 cents versus now I look at it as a Black Friday sale. Peter, a question for you. Based on Jerome Powell saying that he's not even, it's just funny to say it out loud. Did he really say that? But then you see the quotes.
He said it twice.
In
Everybody
case someone needs.
sing along at home. They're not even thinking about it. Peter, what would you say the chances we've seen just a little bit of a spike up this year in the Fed's balance sheet? Do you see this coming down anytime in our lifetime, our children's lifetime, or their children's lifetime? What are the odds on that?
Wow. So what I would say is that I do see the risk of it coming down only because I see a risk of it blowing up and there being no more Fed balance sheet. That's what I could see happening. I could see, that we are really going to end up at some kind of a complete reset. And that's what's going to change the trend, so to speak, in the Fed's balance sheet.
Yeah, it's interesting you mentioned that, because it's like on one hand, people see this stuff happening, but there's the degree to which, well, we've seen it happening since the 50s and 60s, but it's kind of stunning. It does seem as if it's headed there. I mean, if for no other reason, what other outcome could happen?
Yeah, we
Well,
are in it. Go ahead, Peter.
Sorry. Yeah, I mean, I was only going to say the only other outcome is that, let's say the Fed starts to raise rates and the US government decides, well, global major governments decide we're going to start saving money, spending less, and cutting back on all sorts of programs. So to the extent that you think that's a risk, that's the risk. That's all I have to say.
Gwen, you don't seem concerned about that downside that Biden and Trump are going to get together and solve it all.
Oh my gosh. I mean, it's just like what we're discussing right now is so far-fetched. The train is barreling down the track, right? There's just no change to this trajectory, and all the effort that Janet Yellen and before COVID Powell put into trying to reverse that balance sheet trend, it changed it this much, spread it down this much, and then oops, something happened. And yes, it was a big something. It was a global pandemic, but like, boom, let's go the other direction and like slam on the accelerator and just give her. And so, I mean, that is the way that politics works. That's the way that macroeconomics works. That's the way that the markets work now. And you see all these very long-term trends. You look at trends of interest rates and you look at trends of balance sheets, and these things, this isn't something that's developed since COVID or even since the great financial crisis. These things have been developing for decades already. And how is it all going to end? I don't know. Is it going to end with, what is this reset? Something to do with, China turning away from the US dollar, no longer being the global reserve currency. I mean, I think that's fundamental to whatever reset it is that we're talking about. That's going to take some time to develop. I don't think that's going to happen tomorrow by any stretch. And in the meantime, we are in a zero interest rate environment, give or take a tiny bit, some years down the road, because there's no alternative. The government would bankrupt itself even more, whatever that even means, if they tried to start paying back debt with any real interest rate. None of it works with interest rates moving. And so then you get to a negative real interest rate environment if we have any growth at all, and therefore any inflation, and bam, gold and silver make sense in those environments. It's sort of set in stone.
Yeah, and I mean, add on to that, if, we're in year 107 of the Fed. I mean, at some point that's a long-term trend, because the chart just keeps going up. And I like that you point out, because it's the alternate case. Okay, let's say that the Fed did raise interest rates, but we saw what happened at the end of 2018 when they tried, and the stock market responded very quickly. So they really can't do that. Would you agree, Peter?
Chris, you took those words right out of my mouth. That was going to be my next comment, which is that the market's called their bluff. They've actually, tested that approach, and it hasn't worked, and they backed off very quickly. They ruffled a lot of feathers doing that, and it looks like they have really no intent of going that route again, and they've made it clear, and they want everybody to know. And that's why Powell has said no rates, not even thinking of raising rates. And right now we're talking 2023. Let's see how much that holds if we're not well beyond that.
Well, perhaps what I'm excited about, Gwen, I like that you seem fired up today. One of the things that I know that you're like just excited about, because it's like the situation isn't ideal, but Janet Yellen is now the Treasury Secretary. Does that make anything feel a little better?
I mean, what's better? I don't really know. So, I mean, I don't know what's better and what's worse. Those are biased terms, right? So I don't know what exactly we define as better or worse. All that Janet Yellen as Treasury Secretary does is solidify the path that we're on, right? And we were on it even in a Republican Donald Trump administration. We were still on that path. So that's how solid the path is. And now with Yellen and Powell, teaming up independently, but clearly not, it just is what it is, right? And that's the thing, is you always, in investing, you have to play the game that's in front of you. You may not like the game. You may not think that the rules make sense. You may think, because you are an economist, that, this isn't how it should be, but it is. It's how it is. We're in a zero interest rate environment. The market responds to stimulus. All of the stimulus following the great financial crisis created only the most plow horse growth, but the market just was so excited about it. This is the reality that we're in. And within that reality, things are just different than they were, call it 20 years ago. Safe money can't play bonds because bonds don't pay, so they have to sit somewhere else. Well, a lot of it has to sit in the stock market because that's where the money is. But the stock market is inherently risky. We've seen that many times in the last 10 years, or whatever number you want to use. And so you have to hedge the risk of safe money in the stock market. You have to hedge that risk. And so you have to find other places to put it. Is that why Bitcoin is doing well? Yeah, that's one of the reasons why Bitcoin is doing well, is because people are desperately trying to figure out, how do I diversify risk in the stock market? I am a money manager. I invest billions of dollars of safe money. I have to put it in the stock market, but I got to balance that risk somehow, where you got to find alternative asset classes. And gold and silver, even though different things crop up at different times as competition for that safe haven status, and now Bitcoin is one of the contenders. Sure, over time there's always been different contenders. It doesn't matter, because there just aren't that many players in the game. So gold and silver is a safe haven choice. And then silver gets this added bonus of being an industrial metal, when we're hopefully looking forward to a period of industrial growth, with a little bit of fuel on the fire from green energy and all of the silver that's required for green infrastructure. So sorry, I kind of went off the rails there. I am fired up this morning.
Yeah, well, it's great. I mean, I get in trouble because there's so many glorious comments to make about this incredible economy. I mean, touched on the meager growth. Let's not leave out that they have to goose the statistics just to make it look like there's barely even a pulse. Although, Peter, speaking of Bitcoin, I know you created quite a stir on the internet. You had an article recently, which I thought was just a great headline, and I'd love to hear more about what you were thinking there, where you said, is silver the next Bitcoin? And why don't you tell folks what you're thinking on that one?
Yeah, so you're right. That really did get a lot of reaction, a lot of views, but also a lot of comments. And it's funny, because I purposely started that article by saying I'm not trying to pit one against the other. That I don't think this is better than that. I started by saying that you need to really consider both, and that they both have a place in your portfolio. The extent to which they have a place is up to you, but they're not mutually exclusive. And if what I did too is I pulled out a couple of charts showing silver in its last sort of mania, which was up in sort of April of 2011, and then comparing that to the look of the chart of Bitcoin in 2017, and they're very similar. And the whole point was to have people compare them and see that you can get that kind of kicker out of silver. And as you mentioned earlier, anyone who's been in Bitcoin has really ridden this wave. If they're looking to perhaps take some profits, perhaps reallocate, if they're looking for something that can do really well and that has, you know, proven itself over centuries and millennia, and is still very cheap today, silver certainly fits that bill. I mean, gold hit an all-time record, nominal record in August. Silver is still at half of its all-time record, a nominal record. And so if you're looking for relative value, that's certainly a place that you have to consider at the very least.
Gwen, what do you think about that?
I mean, I love that comparison. I mean, I get a lot of questions, I mean, have for years now, about millennial money, where's the younger money going, and like, are we ever going to attract that kind of investor to the gold silver space, or is it only a space for old people? And there's a few answers to that. First of all, it's always been a space for an older cadre of investors, but there's always an older cadre of investors, so it's okay. It's like people evolve into that space, so it works, and that's fine. And I think that's partly an experiential thing. You sort of see the ebbs and flows of macroeconomics over your lifetime, and then you're like, oh man, I really should have some stability here. And then gold silver steps into that position. But then part of that experience as an investor is riding a thing like Bitcoin. And when you have, for the investors who had that experience, oh my gosh, does that ever light a fire, right? People want to do that again. It's so exciting when it happens. And there are other opportunities. Bitcoin is not, it's unusual, but it's not unique. These things absolutely happen. And so if you do your research and start diving into the kinds of things that can give you that lift, that kick, then, you know, gold and silver are very obvious. Uranium is another one that's very obvious. They've done it many times. Will they do it again? Yeah, they'll do it again. And so I think that comparison that Peter drew makes a lot of sense. And maybe it will attract some of those younger investors over, you know, if they see that parallel is very clear and hasn't happened yet for gold and silver.
Yeah, well, I think I applaud it. I think it's fantastic, especially because anyone who lived through the cryptos in 2017, you're already perfectly trained to be a silver investor, and it's hard to get that sort of experience. It's funny, in both April of 2011 in silver and the cryptos in 2017, I had a piece of both of those, so I've experienced the volatility. But again, I mean, I think it's great where I get it. There's people who've been waiting a long time in gold and silver, and you know, they see the cryptos moving. Yet, gee, when you talk about an audience of people that understands whether you like cryptos or not, people who are buying cryptos are generally looking at the same types of things that the people who are investing in silver. What do you think, Peter?
Yeah, I mean, there's one thing, there are a couple things I want to point out. One is that I've done some research on what, you know, if we look at the Robinhood, you know, no fee trading platform in the US, there's an interesting site called, I think it's robintrack.net. And this site, created by a couple of young guys, tracks the ownership of, you know, different assets at Robinhood. So interestingly, I looked at what things like GLD, SLV, and some of the silver and gold stocks have done. And even when things started, well, in fact, and by the way, the average owner of an account at Robinhood is 34 years old. Mm-hmm. So as gold and silver bottomed in March, they had been buying and kept buying. In other words, the ownership level did not drop off like you'd expect when these things corrected. And of course, it grew as the price grew up into August. And when the August correction in silver and gold came, the ownership did not drop off. It either held steady or in some cases actually started to creep up. So they're really starting to understand this sector and learn more about this sector. That's the first thing that I wanted to say. And then the second thing is when we talked about comparing Bitcoin to silver. Of course, silver, you know, and just silver itself can have tremendous runs. But if you look at silver stocks, and especially some junior silver stocks, I mean, just this March to August, some junior silver explorers were up 10 times. So in a 5-month period. So that gives you some idea of what that space can do. And again, anybody who's, happy with their crypto investments and is looking at something else that can provide those kinds of returns, silver and silver stocks certainly fit that bill.
Yeah, I sure think so. And I'm darn excited that it looks like Gwen has a comment there. Go ahead,
Well,
Gwen.
I think a little addition to this conversation that we're having right now is the other other side of the investor spectrum, which is that the funds are doing the same thing that we're talking about the 30-year-olds doing, right? Over the last, there's been lots of chatter about how what's been driving Bitcoin in the last little while has been like institutional money getting behind cryptos. But institutional money, I think that goes back to a comment I made a little bit ago about there's not very many options when you're trying to diversify your risk in the stock market. And so you're trying to hedge against inflation, you're trying to hedge against stock market corrections. What options do you have? There aren't that many. And so whether you're coming to it from a, high risk, like open to high risk, younger investor who's experienced Bitcoin and wants to find another thing that's going to go, or you're looking at it as a fund manager who needs to diversify those risks and knows that there aren't very many options, and Bitcoin and silver and gold work for that. Both ends of the spectrum are coming into these areas right now. And so, yeah, they're not competition. They're peers. And the thing that drives these markets is, the scale of investor that comes in, obviously. Gold and silver have their dedicated investors, but the dedicated investors aren't enough to create a bull market. It's when the generalists come in. And if we have generalists coming in from all of these different angles, that's what's really going to drive this thing.
Yeah, which is why I find it interesting. I have Andy Scheckman on for Miles Franklin each week, and he talks about how they're getting a lot of new people, not just the silver bugs. Peter, I got one for you here along the lines of what we're mentioning of whether it's good or bad for silver, what Bitcoin is doing. Let's pull up the coin market cap. So here you see market cap of the cryptos, 541 billion. I see the most common estimates of above ground investment grade supply of silver, 2, maybe 3 billion ounces. So let's call that 50 to 75 billion. So if you use 50, basically you got crypto market could buy the entire silver market 11 times over. Obviously, if you look at Berkshire Hathaway cash or Apple cash versus silver, puts into perspective how small it is. So great. I mean, I would think if Bitcoin shoots up to 30,000, that number gets even bigger. Again, especially for someone who's lived through what happened the last time, wouldn't you think that if they already have that mindset, would be great to have somewhere to diversify into?
Yeah, I mean, exactly. Like you said, once you've been through this sort of cycle, this mania cycle that most assets will go through, that, like Gwen said, that gives you the appetite for it. It also, if you write it down, it also is a big lesson. Most of us have been through, and so it also, and if it doesn't, sort of turn you off completely, it also opens you up to what other possibilities might there be out there. And you're right. I mean, look, like you said, that's 10, 11 times the market cap of silver. Imagine if a little bit of institutional, generalist, and crypto money comes into silver. I mean, it's like all bets are off, right? I can't even start to guess where it would go. I mean, my own forecasts are for the easy multiple sort of 3-digit silver price, but again, all bets are off if you get that kind of reaction. And frankly, the way money printing and the level of global debt and negative interest rates are heading, I don't see why is not a realistic possibility, a very real possibility that we end up going down that road.
Yeah, and Gwen, maybe my math is off here, but if we have $90 trillion is the value of the global stock markets. Now, there may be a new quantitative easing program by the time I finish this sentence, pushing that closer to 100 trillion. But I think 50 billion could get bought out many times if people ever think, gee, a lot of these stocks are at their highs, yet forget even just if people took the Warren Buffett approach where, I don't know, maybe he still thinks gold is a useless door stopper, but likes companies that sell them for a high price. I mean, if people are just looking at stocks that are at their high end versus low end, even in the stock world, you don't have to go to conspiracy theory land for this.
And that's a really good point, I think. I mean, I've recently crunched a lot of these numbers for gold. I know they're the same for silver. I haven't done the math, but even if you are not looking for a rise in gold or silver price, but you're an investor who's looking for value and growth, and put it in this whole context of there's very few, bonds don't pay their return-free risk. So where are you going to put your money? And so you want dividends. And so look, I mean, even if you just take it back to the very basics, like, price in terms of like a range, like a value range, and then, dividend yields, gold miners are shining right now. They have like 2% average dividend yield, which is 0.5% better than the average of the S&P 500. Silver miners are doing the same, and that is only going to get better. And then if you look at just balance sheets, like we talk so much about how much debt there is out there. Well, guess which companies don't have debt right now, very much at all? Gold and silver miners, like they actually have almost no debt. It's hard to believe, but they really, if you look across like Scotiabank's coverage world or, Canaccord's coverage world of mid-tier and major gold or silver producers, they're in a net cash position. They actually don't have debt. That is anomalous in the world of stocks right now, right? And so if you want to just look at it from a very financial perspective, who's gonna have a really robust balance sheet and pay me dividends, and there's lots of investors who look at stocks from that angle, as they should, if that's their risk platform and whatnot. And the silver and gold miners really shine from that angle. So there's all kinds of reasons to believe that generalists are going to turn their attention here. And yes, when you compare the $90 trillion stock market with the $50 billion silver market, and the gold market is not much bigger, you can get bought out so many times over that you can't count it. And that's what creates these crazy markets, is it only takes 1% portfolio allocation amongst generalist investors to like overwhelm the silver space or the gold space, whatever it is you're talking about.
What if there was some crazy guy on YouTube who just goes closer to like the 95 to 100% allocation, man? He's good for good times one of these days, right?
You're not the only one, 95%, my friend.
Well, I mean, I'm not recommending or advocating that for anyone else. And I've gotten clobbered a couple times in life doing that. Had to sell metals at prices that were not easy
Painful
to do. But from the perspective, if you can wait, I don't know, maybe I'll wait 20 more years. I don't know. I don't think so, but I'm not averse to like, I don't want to dig in my heels, but if someone can explain how the Fed's ever going to undo this behemoth, although Peter, I don't know if you can answer that one. I mean, I think that's a trick question, but can you let folks know about what you're going to be writing about in the newsletter? Especially, I think there's a lot of people who get it. We don't know the timing, but there is going to be a move. What kind of stocks to be looking at in terms of the different silver stocks? Can you let folks know what you'll be covering so they can get an idea of that?
Yeah, for sure. So, yeah, I mean, the idea behind is that this is going to be written in, relatively plain language. I mean, I do the research, crunch the numbers and all of that, but try to put my thoughts into a readable report, a readable monthly newsletter. And, we know that some people will be relatively new to the space. We know that some people will be more comfortable and, have been in the space for a while. But because we want to sort of introduce and give access to people who maybe have not looked at this that deeply before. We're going to cover the whole investment space for silver, everything from bullion-backed ETFs, and even talk about some gold and silver dealers, coin dealers, and bar dealers, and so on, and work our way from there to the larger cap producers, some royalty companies, and then all the way down to medium-sized producers, growing producers, and even junior explorers. So the whole gamut. And it's for the reader, the subscriber, to decide what their risk level is, what they're comfortable in. But I can tell you that, even in the even sort of the larger cap, there was a period back in, I think it was about 2005 to 2008, that one of, if not the largest silver company, actually was up 10 times. So, and this is in the lowest risk silver company. So, you don't need to go to the highest risk to get those kinds of attractive returns. And needless to say, the risk will go up with, the riskier, with the riskier types of plays, but the returns are commensurate. So, readers can really make the adjustments that suit them, but we will cover the whole space for sure.
It's pretty awesome. And I'm, again, not advocating this, although as you're saying this, I'm like, wow, I can get that list, then find which ones have listed options. And so do not do that at home, kids. Any final thoughts before I get anybody in trouble here, silver related or elsewise, that you'd like to leave folks with today?
I mean, first of all, thanks so much for having us. We love your show and we love your audience. It's great to find, I think Peter and I connected because he was looking to launch a newsletter. I had always wanted to create a silver newsletter. I just didn't have time in my day to produce another newsletter. So I was super excited when I met Peter, and he has the knowledge and the experience, and he's a very good communicator, and he's passionate about silver. So it was a really great fit for him to join Resource Maven, use my platform, and produce his letter. But one thing is that it's amazing there isn't actually a newsletter out there from an independent newsletter writer, so someone who's not paid by companies, that covers the silver space. There's letters that have focused more or less on silver over the years, but they are no longer focused only on the silver metal. And so, but yet there's an army of investors out there who love silver, as your listeners, are certainly part of that army and represent really well. And so it's exciting to be able to produce a product that hopefully can help feed that interest, because it's very real, and it's very real for a real reason, which is that silver can kill it in a precious metals market and do way better than gold. So it's a really exciting moment. And so, yeah, Peter and I are stoked. We're ready for January 1st when the first issue comes out.
Yeah, me too. And especially because, there's the people who are already into silver that I think are going to like it. Yet again, I'm biased, but I just think the argument is so logical. You could just put Jerome Powell as the advertising lead magnet, let him talk. I mean, I think people are figuring this out. I also like that, while I sit here and I, essentially have a bet on silver, the commodity, and derivatives thereof, you don't have to have silver go anywhere to do well when you understand what's going on in these stocks, when you understand the management teams, when you know who's doing good business and what to avoid. So I'm really grateful that you guys are going to be putting that out there. I will put up the website in a second, although before we get there, just to make sure we get the word out a little bit more, we're going to give away on this Silver December to remember. Hopefully I can get my Donald Trump coin. You can see up there. I've learned from the comment sections not to make any sort of comment of who I think is president or whether I think it's decided, because no matter what comment I make, I get people upset on both sides. So I don't know about that, but if you tag at Peter_Krauth, Krauth, and this is all in the description field below, as well as at Mining Maven Gwen and Arcadia Economic with this interview link, share it out there so people can know about what they have coming up. Someone is going to win the Trump ounce, and Gwen, can you let folks know the website as we wrap up here, just so they can keep track of you and also the letter?
Absolutely. So resourcemaven.ca is my home base. That's where my letters are. And Peter's letter will be based at silverstockinvestor.com. We're still, that site has not quite launched yet. We're getting really close, but you can absolutely find a preliminary version of it at resourcemaven.ca. You can click on that blue banner there. That's the logo for Peter's letter, and that's how you can get some information and sign up right now if you want, so that you're ready and waiting when we launch in a few weeks.
Gwen, thank you. Peter, great to have you on here. I have a feeling we're going to be talking a lot more, and certainly exciting times coming up. So we'll look forward to seeing the success of the letter and have you guys back on soon.
Thank you, Chris.